Hey Quanties, and welcome back to Quantify, your go-to channel for demystifying the markets with data-driven insights. It's May 22nd, 2025, and we're looking at a pretty interesting day for the S&P 500, tracked here by the SPY ETF. The market seems to be taking a bit of a breather today, up just slightly by about 0.04% as of my recording, so let's break down the chart and see what key levels and stories are shaping the price action. Looking at our daily chart for SPY, we're currently hovering around 583. The price has been in a strong uptrend for several months, and recently, after a bit of a dip and recovery in April, we've pushed back towards the highs. Now, for the critical levels you should be watching. On the upside, the immediate resistance is clearly around 589.57. This level has capped prices recently, and a decisive break above this could open the door to further gains, perhaps testing psychological levels like 590 or even aiming for 600 in the longer term. Keep an eye on volume. If we test this resistance, a strong breakout would need solid participation. Now, for support, if we see some selling pressure, the first area to watch is our current level around 583. Below that, 575.47 is a significant level. This was previous resistance and the top of a recently filled gap area, so we'd want to see it hold as new support. The purple moving average on our chart, which has been acting as a dynamic support, also sits around this zone. Further down, we have 566.90, and then a very important zone around 560.08, which marks the bottom of that upper gap area we just talked about. If these levels fail, the next major line in the sand would be down near 555.67, and then the green longer-term moving average. The RSI, or Relative Strength Index, is currently at 62.47, which is in bullish territory above 50, but not yet extremely overbought, suggesting there could still be room for upside momentum. So what are the trade ideas based on this? For you bulls out there, a long position could be considered on a confirmed breakout above that 589.57 resistance. Look for a strong daily close above it, ideally with increased volume, or a successful retest of this level as support. Alternatively, a bounce off key support levels like 575.47 or the dynamic purple moving average could offer a long entry, provided we see signs of buying interest, like bullish candlestick patterns. For the bears, if SPY fails to break 589.57 and shows signs of rejection, think bearish engulfing candles or a developing bearish divergence on the RSI, a short trade could be initiated targeting 575.47 as a first take-profit area. A more aggressive short could be considered if we see a clean break and close below 575.47, then targeting 566.90 and potentially 560.08. As always, Quackies, manage your risk carefully with appropriate stop-loss orders no matter which direction you're trading. Now let's touch on a few news items that might be influencing the market mood today. The S&P 500's slight gains suggest a cautious optimism or perhaps a wait-and-see approach from investors. First up, an interesting development in the crypto world. Bitcoin has reportedly hit a new all-time high, with some forecasts even projecting it could reach as high as $143,000 this year. This kind of surge in Bitcoin can sometimes be interpreted as a broader risk-on sentiment in the markets, where investors are more willing to take on speculative assets. This could have a positive spillover effect on equities, though it can also mean capital is being diverted. It's definitely a sign of strong investor confidence in certain segments. Next, from Washington, there's talk about fiscal policy. A headline indicates that the White House expects the Senate to get busy on a tax bill. Tax policies, especially those affecting corporations, can have a direct and significant impact on company earnings and, by extension, stock market valuations. The anticipation of changes to the tax code, whether cuts or hikes, can lead to market repositioning. So any developments on this front will be closely watched by investors, as it could influence future profitability and investment decisions. Finally, let's talk interest rates and inflation. We're seeing reports that the 10-year TIPS yield is around 2.22% ahead of an $18 billion auction. TIPS, or Treasury Inflation-Protected Securities, give us a read on real yields and inflation expectations. A stable or rising real yield can sometimes be a headwind for equities as it makes bonds relatively more attractive. The auction itself will also be a gauge of demand for U.S. debt, which can reflect investor confidence and liquidity conditions. These are fundamental factors that underpin market valuations, so we always keep an eye on them. All right, Quanties, that's your market rundown and news brief for today. Remember, these are just my observations and potential scenarios. Always do your own research and due diligence before making any investment decisions. If you found this helpful, please smash that like button, subscribe to Quantify, and hit the notification bell so you don't miss our next update. Trade smart, stay informed, and I'll see you in the next video.